Hello everyone, this is Gracie here. In this video, we'll be discussing illustration 5 problems from presentation of financial statement. From the following particulars, prepare balance sheet of MMC Limited as on 31st March 2016, giving all the heads and subheads as per schedule 3. So we have particulars and amount. We have share capital 50,000, inventories 13,000, reserves and surplus 47,000, intangible fixed asset 76,420, share application money and pending allotment 5,300, current investments 2,400, long-term borrowings 10,000, capital working in progress 5,800, short-term provisions 7,340, other current assets 700, trade receivables 940. Other long-term liabilities 2,000, other current assets 8,300, long-term provisions 1,000, trade payables 2,500, intangible assets under development 800, cash and cash equivalent 1,400, other current liabilities 1,500, trade receivables 3,600, other non-current assets 940, short-term provisions 700, long-term loans and advances 7,340. So these are the items which is given in the problem. Then we have other adjustments. So they've given in the problem, from the following particulars, prepare balance sheet of MMC Limited as on 31st March 2016. So give all the heads and subheads as per schedule 3. So they've asked us to prepare the balance sheet by giving all the subheads and heads and prepare the balance sheet. So as for the format, what we have learned in the previous video, balance sheet of MMC Limited as on 31st March 2016, we have particulars, vertical balance sheet, this is particulars, amount and the note. So according to the balance sheet, we have equity and liability. Under that we have shareholders funds. Then we'll have share application money, pending allotment, non-current liabilities, current liabilities, and assets, non-current assets. Under that we'll have fixed asset, non-current investments, deferred tax asset, long-term loans and advances, other non-current assets. Then we will have current assets, current investment, trade receivables, inventories, cash and cash equivalent, short-term loans and advances, and other current assets. So under this problem, now we are going to classify the items which is given in the question according to the format. So before that, we need to know under which head does all these items lie. So according to illustration 5, share capital comes under share capital heading. Inventories will come under current asset. Reserves and surplus under reserves and surplus under shareholders funds. Tangible fixed asset will come under the heading fixed assets. Share application and pending allotment will have a separate heading. It will come under share application money and pending allotment in your liability side of your vertical balance sheet. Current investments in your current asset. Long-term borrowings and non-current liabilities. Capital work in progress, non-current asset. Long-term loans and advances, non-current asset. Short-term provisions, current liability. Other non-current assets will come under non-current assets. Trade receivables under current assets. Other current liabilities will come under current liabilities. Cash and cash equivalents under current asset. Intangible assets under development will come under non-current asset. Trade payables under current liabilities. Long-term provisions under non-current liabilities. Other current assets under current assets. Other long-term liabilities under non-current liabilities. So these are the headings as well as subheading for the items which is shown in the question. So now we will classify. Share capital will come under equity and liability column under the heading shareholders fund. So the first item will be share capital. How much is mentioned in the question? 50,000. So we will write shareholders funds, share capital 50,000. Next we have and anything related to share under share capital heading will be next will be reserves and surplus. So we will write reserves and surplus as per it is given in the question, which is 47,000. So after your reserves and surplus, they've given us other items, share application money pending allotment. So we have share application money pending allotment, which has other heading for it. So we will record it under share application money pending allotment, which is 5,300. Next, after that, we'll have all non-current liabilities. Next heading will be your non-current liabilities. Under non-current liabilities, as per your balance sheet format, you need to check what comes under your non-current liabilities. So before preparing your balance sheet or preparation of presentation of financial statement problems, you need to know the format of your balance sheet and profit and loss statement format. So when you're solving the problem, please keep your format along with y'all and start solving, so it'll be easy for y'all to solve the other problems. So now next heading is non-current liabilities as per the format. Under non-current liabilities, you have long-term borrowings, deferred tax liability, other long-term liabilities, and long-term provisions. First, we will check in the question, do we have long-term borrowings? So in the question, we have long-term borrowings, which is 10,000. So we will be recording long-term borrowings 10,000. Next, we have deferred tax liability in the format under non-current liabilities. But in this problem, we don't have deferred tax liability, so it is nil. So as per the format, we have the next item, other long-term liabilities. Do we have other long-term liabilities? Let us look into the question. So other long-term liability in the problem is other long-term liabilities. Yes, we have other long-term liabilities, which is 2,000. So we will be recording it in the solution part. 2,000 other long-term liabilities. And according to the format, we have long-term provisions. So in the question we have long-term provisions, which is 1,000. So it is recorded in the format. So other long-term provisions, which is 1,000. Next, we have current liabilities. So when we have current liabilities as your next heading under your equity and share capital funds, shareholders funds. Under current liabilities, we have short-term borrowings, trade payables, other current liabilities, and short-term provisions. So we will check, do we have short-term borrowings in the question? Short-term borrowings, yes. We have short-term provisions. We have short-term provisions but not short-term borrowing. Then we will check, do we have trade payables according to the format. In the problem we have trade payables, which is 2,500, so it is recorded here 2,500. Then according to the format we have other current liabilities. So in the question we have other current liabilities, which is 1,500. So we will record it in the solution 1,500. Then we have short-term provisions as per the format. We have short-term provisions, which is 700. So 700 is recorded. So these are the items which appears in the format of your balance sheet according to schedule 3. So we need to look into the question whether we have all these items and place those the items according to the format. So we have placed, so the total is 1,20,000. So next is our asset column arrangements. So under your asset format, you have non-current assets and current assets, two main headings. So under non-current assets, you have subheadings like fixed asset, non-current investments, deferred tax asset, long-term loans and advances, and other non-current assets. So first we'll get into fixed asset. Under the subheading of fixed asset, you have other subheadings, that is tangible asset, intangible, capital and work in progress, intangible asset under development. So fixed asset, tangible. Do we have tangible fixed asset? Yes. Tangible fixed asset is 76,420. So we will record tangible fixed asset 76,420. Next, we have intangible assets. So your intangible assets are also given under development, which is 800. So we will record intangible assets, which is 800. Next, we need to see, do we have other items like capital work in progress. So yes, we have capital work in progress, which is 5,800. So we will record capital work in progress 5,800. Next, according to the format, we have intangible assets under development. We have taken intangible assets under development. So there are two classifications under fixed asset: tangible assets and intangible assets for under development and intangible assets. So there are intangible assets as well as intangible assets under development. So in the question they have given us intangible assets under development. So we have taken intangible assets under development and we have written in the solution, which is 800. Next, we have non-current investments. Do we have non-current investment in the question? No, we don't have non-current investments in the question. Next, we have deferred tax asset. So we don't have deferred tax asset in the question. Next item is long-term loans and advances. Yes, we have long-term loans and advances. So 7,340. So according to the format, we have long-term loans and advances 7,340. Next heading what we have according to the format is other non-current assets. We will check in the question, do we have other non-current assets? Yes, other non-current assets are present, which is 700. So we will record it. Other non-current assets, other non-current assets is in 940. So we will record other non-current assets, which is 940. Next, as soon as we have done with non-current assets and the subheadings, we will get into the next point, which is current asset. Under current asset, you need to check in the question whether you have current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. First one is your current investments. Yes, we have current as investments, which is 2,400. So current investments 2,400. So we will record current investments 2,400. Next, as per the format, we need to check, do we have trade receivables? Yes, we have trade receivables, which is 3,600. So we will be recording the trade receivables, which is 3,600. Next, according to the format, inventories should be present. Do we have inventories in the question? So inventories, which is 13,000 here. So we will record inventories 13,000. Next, we have cash and cash equivalent heading. Cash and cash equivalent in the question is 1,400. So we will record cash and cash equivalent 1,400. Next subheading under current assets is short-term loans and advances. We need to check, do we have short-term loans and advances? We have long short-term provisions, but we do not have short-term loans and advances, so it will be nil. So short-term loans and advances is nil. Next is other current assets. So do we have other current assets in the problem? Yes, other current assets is 8,300. So when you total up, you will have you need to get the balance similar. Total liabilities is equal to total assets, then your problem is placed right. Next problem is illustration 6. The following balances have been extracted from the books of Rapid Limited as on 31st March 2016. So they've given particulars: share capital, equity share of ₹10 each, fully paid, 10 lakh, securities premium, 12% debentures, trade payables, proposed dividend, debit in statement of profit and loss, investments in government securities, work in progress, patents, unclaimed dividend, trade receivables, public deposits, plant and equipment, furniture and fixtures, office equipment, stock and trade, stores and spares, expenses on issue of debentures. They have asked us prepare a balance sheet of the company as per Schedule 3, Part 1 of the Companies Act 2013. So now we are going to classify all these items based on their groups and subgroups. So balance sheet, as before classifying that, we need to put it into a proper head. So we will do the reallocation of under subgroups and subgroups. So we will get into the working note first before preparing the balance sheet. So your first working note will be always share capital. Under share capital, we'll have authorized, issued and subscribed. So in the question, if you look into here, share capital equity shares of rupees 10 each fully paid. How much is it? 10 lakh. So rupees 10 one share and the amount is 10 lakh. So 10 lakh divided by 10 will give you number of shares. So the number of shares will be 1 lakh equity shares of rupees 10 each, which is 10 lakh. So after share capital, according to the balance sheet format it will be reserves and surplus. So under reserves and surplus, what items will be taken is anything which you have kept to pay to your shareholders. It can be a premium allotted to share premium, or it can be any dividend which you're going to give to the shareholders. Everything will be taken from the reserves and paid. So any taxes regarding dividend, everything will be paid through the reserves and surplus what has been stored. So we need to check whether any item belonging to reserves and surplus is present in the question. So now we have security premium. So securities premium is when you get good profit, they maintain it in the reserves and surplus so that in future you can take from the reserves and surplus and take benefit out of it. So to make use of that amount. So security premium shares will be given in par value, discount and at premium rate. So when it's giving a premium rate, it will be taken from the reserves and surplus. So it will come under your reserves and surplus. So next we will be taking securities premium 1 lakh. So next is all the expenses related to any shares, debentures or stocks share trading will be taken from reserves and surplus. So if you look at the question they have given, 12% debentures, trade payables, proposed debit in statement of profit and loss, that will also appear in your reserves and surplus. Debit in statement of profit and loss, in the sense it is a loss in your profit and loss statement. Next, investments in government bonds will be coming under investments. Work in progress, patents, unclaimed dividend, trade receivables, public deposits, plant and equipments, furniture and fixtures, office and equipments, stock and trade, stores and spares will come under those different heading groups. Expenses on issue of debentures. So this is related to trading with securities. So expense in issuing debentures. So that expense will be met from the reserves and surplus amount. So as per the schedule working out what we have done, we have reserves and surplus. Under that we are having securities premium. So securities premium is where it has been securities which has been collected at a higher rate. So the security premium what you are having is 1 lakh. From the security premium of 1 lakh, we will minus the expenses on issue of debentures. So what is the expense on issue of debentures is 20,000. So 21 lakh minus 20,000 will give you 80,000. So with this 80,000, in the question they have stated we have deficit, that is debit in statement of profit and loss, which means it is a loss in your profit and loss statement. So how much is that loss? The loss is 30,000. So from the balance 80,000, 30,000 is deducted. So your reserves and surplus balance is 50,000. So from this security premium which has been collected from the shareholders, excess from the face value amount of the shareholders is being stored in their reserves and surplus. So to meet all your expenses related to while trading in securities. So this security premium of 1 lakh is used for meeting the expenses which is incurred for issue of debentures of 20,000, which have got balance 80,000. Then the loss which is incurred in the profit and loss has been set up by deducting from the remaining balance of your security premium. So 80,000 minus 30,000 will give you 50,000. So next heading in your balance sheet format will be long-term borrowings. So under long-term borrowings, the money what you are borrowing for your business purpose, it is classified into secured borrowings and unsecured borrowings. So in the question we have 12% debentures. Then we need to look into the problem. Do we have any other borrowings? We have public deposits. So we have we have taken debentures, 12% debentures. We have issued debenture certificate and collected debenture amount, and we have also invited for public deposits. So debentures will come under your secured loan, because it is being issued based on debentures are issued to debenture holders by giving debenture certificates to them, so they will come up and frequent interest is need to be paid to them regularly. Public deposits, so public deposits is being issued for anyone in the public who are interested to invest in the company will come forward to invest in the company's share, or buying company's share. So it comes under unsecured. So it can be maturity period for public deposits can be 6 months, or it can also go to up to 5 years. So anytime they can withdraw their deposits. So it comes under your unsecured borrowings. So secured is 12% debenture, which is 4 lakh. Then public deposit has been accounted here. So secured 12% debentures 4 lakh, and unsecured borrowings public deposit 50,000. Where you have long term borrowings, what you have borrowed is 4 lakh 50,000. The next heading under in your balance sheet format is other current liabilities. So our other current liabilities, the liability what you are yet to be paid. So what is the liability which you have to pay in the question is you have unclaimed dividend. So unclaimed dividend is the dividend which you have not paid but you need to pay it. So unclaimed dividend will be taken under other current liabilities. So the amount of unclaimed dividend is 10,000. Next you have short-term provisions. So provisions here what you have done. Usually the provisions what you make is provision for taxation, provision for proposed dividend is also provision. Proposed dividend is where you have decided to issue, so you have decided to issue so much dividend to the equity shareholders, and you have made a reserve out of, you have made a reserve. So it is a provision what you have made, where you will be giving it to your equity shareholders in your upcoming years. So it is a short-term provision what you have made. So in the question we have proposed dividend in the question. So we will be taking under short-term provisions. So 50,000 is your proposed dividends. So next we have your assets. Under assets we have tangible and intangible assets. Under tangible, all your assets which you can touch and feel. Intangible assets are tangible assets are where you can touch, see, and intangible assets are only you can feel and enjoy the reputation which is being gained out of it. So first let us look into what your tangible assets. So in the question, your tangible assets what you have is you have plant and equipment, furniture, office equipments. So we will be taking plant and equipment 6 lakh, furniture and fixture 1 lakh, office equipment 2 lakh. So total tangible assets is 9 lakh. So under intangible it will usually goodwill, patents, copyrights will come under intangible assets. So under that we have patent, only patent we have, we don't have goodwill here. So patent we will be considering it. So intangible assets patent 40,000. Next heading under assets is non-current investments. So under non-current investments, we need to look into what are the investments which are your long-term investments. So investments in the question is investment in government bonds. So we will be taking investment in government bonds, which is 4 lakh. So the next heading under your balance sheet format is inventory. So inventories will be taking all your or your current assets, like it can current assets like stores and spares, work in progress, stock in trade. So under your inventories we will look into what are the inventories items here. We have stock in trade. So the stock, then stores and spares comes under your inventories. Then we have also work in progress. So we will be taking into consideration work in progress, stock in trade, and stores and space. So all your stock what you have got, so which is 1 lakh, 2 lakh 60,000 and 40,000. So the total of it will be 4 lakh. So now we have classified it based on the schedule. We will be arranging it in your balance sheet. So according to your balance sheet of Rabin Limited as on 31st March 2016, equity and liability under shareholders funds, share capital and reserves and surplus. So share capital is 10 lakh and reserves and surplus what you have gained from the calculation, from the calculation 2, that is from this calculation number 2, we have got 50,000. So we will be considering 50,000. So the total equity and liability is 10 lakh 50,000. Next is your non-current liabilities. Under non-current liabilities, you have long-term borrowings. For this calculation number or working note is 3. So here you have under long-term borrowings secured and unsecured, where you have got total 4 lakh 50. So we will be taking under the heading here, under the heading non-current liabilities, long-term borrowings, working note 3, 4 lakh 50. Then we have current liabilities. In current liabilities, we have trade payables, other current liabilities, and short-term provisions, which is there in the question. So now trade payables, which is there in the question. So we will be taking trade. In the question we have trade payables which is 2 lakh, so we will be taking it directly, trade payables 2 lakh. Then other current liabilities, we are working out what we have done. Other current liabilities is your unpaid dividend which is 10,000, so we will be taking unpaid other current liabilities, working note for 10,000. Short-term provisions, we have proposed dividend as your short-term provisions, so working note 5 which is 50,000 which is there here, working note 5 50,000. So we have taken that as well. So this is your total of your liabilities. So when we total up, we get 70 lakh 60,000. Next is our assets. So under assets we have fixed asset under the heading non-current assets. So your fixed assets are of two, tangible and intangible. So according to the calculation, tangible total what we have got is 9 lakh and intangible 40,000. So we will be recording it, tangible 9 lakh, intangible 40,000, and other items are your non-current assets according to the balance sheet format. So your non-current assets also are found in working note, which is your government bonds. So your non-current investments is your government bonds, so which is 4 lakh. So it is a longer period investment. So government bonds will come under non-current investment. Any investment which is made in government sectors will be your secured investment, as well as it is a long-term investment. So it is called as non-current investment. So under that, government bonds 4 lakh. So working note is 7. So working note 7, non-current investments 4 lakh. So the total non-current assets is 13 lakh 40,000. Next you have current assets. So under current assets, according to the balance sheet format, we have inventories, trade receivables and other items. So in this question we have only inventories and trade receivables. So inventories we have calculation which is mentioned. Inventories we have work in progress, stock in trade, stores and spares. So the total of your inventories is 4 lakh. So we are considering it. Inventories, working note 8, 4 lakh. Trade receivables is present in the question. So trade receivable is, which is mentioned here, which is coming approximately to which is the total of your trade receivables is 20,000. So the total of your assets is 17 lakh 60,000. So your balance sheet, your assets is equal to your liabilities. So in order to understand this problem clearly, you need to go through your balance sheet format thoroughly. So when you know the format, easily you can solve all these problems. So the next question what we are going to discuss is illustration 7. From the given trial balance, prepare the balance sheet of Moonlight Limited as on 31st March 2016. So trial balance as on 31st March 2016, they have given share capital, bills receivable, 10% mortgage loan, and they have given stores and space, debtors, plant and machinery, goodwill, provision for tax, general reserve, cash in hand, calls and arrears, marketable securities. So from the previous thing, share capital will come under share capitals and equity share capital. Bills receivable will be coming under current assets. then 10% mortgage loan will come under current non-current liabilities. Bills receivable, which is your current asset. Then your stores and spares will be coming under inventories. Debtors will come under your current assets. Then plant and machinery will come under your tangible assets. Then that is your non-current asset. Goodwill will be coming under your intangible assets. Provision for taxation, short-term provisions. Then general reserves will be coming under general reserves and surplus. Cash in hand will be coming under your current assets. Calls and arrears will come under equity shareholders funds. Marketable securities also will be coming under your, it will be coming under your investments. So you are investing in the securities in the market of rupees 5,000. So let us get into the working notes first. So your first working note will always be equity shareholders funds. So notes forming an integral part of the balance sheet. First is share capital, authorized and issued. So in this problem we have calls and arrears. So what is calls and arrears is where the owner of the company will call up the equity shareholders to pay the balance amount which has to be paid for the number of the shares which has been purchased. And if the shareholders is not responding for the calls which has been made, then calls and arrears will occur. So the segregation, if there is calls and arrears, the segregation will be done like this. So authorized and issued share capital will be as per the question, which states 40,000 equity shares of rupees 10 each, which is 4 lakh. So we will be recording it. Authorized and issued will be 40 lakhs equity share of rupees 10 each, which is 4 lakh. Then subscribed, as we have calls and arrears, they are mentioned in the question. Calls and arrears in the question is at rupees 2 per share. So calls and arrears rupees 2 per share in the sense, and the amount of what you look into is 2,000. So if it is rupees 2, then to get 2,000, then 1,000 shares are under pending, for which the money has not been paid by the shareholders. So 1,000 into 2 will give you 2,000. So you need to understand, they have told calls and arrears is at rupees 2 per share and the amount is 2,000. So 1,000 into 2 will give you 2,000. So the amount will be 2,000 of 1,000 shares. So out of 40,000 shares, 1,000 shares are calls in arrears. So we will divide it as per the working note. So now subscribed and fully paid is 39,000. So how did you get this 39,000 is, as that is called in arrears of 1,000 shares. So 39,000, 40,000 minus 1,000. So how did you get 1,000 is from the calls and arrears amount and per share value. The calls and arrears amount is 2,000. 2,000 divided by 2 will give you 1,000. So actually fully paid and subscribed shares is 39,000, which is 40,000 minus 1,000. 39,000 equity shares of rupees 10 each is 3,90,000. Then subscribed but not fully paid. So you have subscribed for it but it is not paid. How many shares is not paid? 1,000 equity shares of rupees 10 each, which will give you 10,000. So in 10,000, how much is not paid? Calls and arrears of rupees 2 each per share. The amount is 2,000. So from 1,000 equity shares of rupees 10 each, 2,000 has not been paid. So which is your calls and arrears. So 10,000 minus 2,000 will give you 8,000. So your actual share value will be, or subscribed amount will be 3,98,000. So this is one way, or you can directly do it. So which is subscribed can be 40,000 of equity share rupees 10 each, and how much is which will give you 4 lakh, and how much is your calls and arrears? 2,000. So 4 lakh minus 2,000, directly minusing the calls and arrears will give you the share capital amount, which is 3,98,000. So this is a clear step which you need to solve, where you will show your issued, subscribed. Why did you minus this? Because you have calls and arrears which has not been fully subscribed. So only 39,000 is subscribed and 1,000 is not fully paid. So you're showing it clearly. This is a direct method where subscribed is 4 lakh and calls and arrears which is not paid 2,000. So you will get directly 3,98,000. We have got 3,98,000. So the next calculation as per the balance sheet format is reserves and surplus. So in the question you have reserves, general reserves. So how much is your general reserves in the question is, which is mentioned in the question is 1,30,000. So we will be taking 1,30,000. Next we have long-term borrowings. So long-term borrowings will be your loan. So mortgage loan is nothing but your long-term borrowings. So how much is your loan what you have taken, which is 1,70,000. So we will be showing under the working loan long-term borrowings, which is 1,70,000. Next we have short-term provisions according to your balance sheet format. So under short-term provisions, as I've told, proposed dividend, provision for taxation, anything which has been made as a provision will be coming under short-term provisions. So provision for taxation, which is mentioned in the question, is being taken. Provision for taxation, which is 20 which is 26,000. So the provision for taxation is 26,000. Next we have fixed assets. So our liability items are done. So now our fixed assets, we need to check how many are tangible and intangible. So in the question we have fixed asset. So fixed asset as a plant and machinery, which is tangible, and goodwill is intangible. So we'll be classifying that under tangible plant and machinery 40,000, intangible goodwill which is 5,000. I'm sorry, plant and machinery which is 2,90,000 and goodwill is 40,000. So next we have your current investments. So current investments what you have made is marketable securities, which is given in the problem, marketable securities, which is 5,000, which is your current securities. So it is coming under current securities is where the security is being traded openly, which has been sold and bought immediately. So it is when it's market securities, which will be coming under your current should be coming under your current investments what you have made. So marketable securities is 5,000. Next you have inventories. Under inventories you need to check what are the items which are there in the question. You have stores and spares. You don't have anywhere stock here, so you will take only stores and spares. So stores and spares is 1,15,000. Next you have trade receivables. So under trade receivables you will be taking into consideration debtors and bills receivable. So do you have debtors and bills receivable in the problem? Yes, debtors is 1,66,000 and bills receivable is, as per the question, bills receivable is 90,000. So we'll be taking debtors 1,66,000, bills receivable 90,000. So the total is 2,56,000. Then the next heading up under your assets is under classifications is cash and cash equivalents. We have cash and cash in hand in the problem, which is 18,000. So we will be taking that in your working note, cash in hand 18,000. So we have almost covered all the items. So now we need to place in the balance sheet to check whether what we're doing is right. So Moonlight Limited balance sheet as on 31st March 2016, equity and liability. Under equity and liability, shareholders funds. Under shareholders funds we have share capital. So share capital as per the working note we will be getting 3,98,000. The working note is 1. So please mention working note 1, 3,98,000. Next will be our reserves and surplus under shareholders funds. So reserves and surplus working note will be, we have done the working note which was giving you 1,30,000. So we will be taking here reserves and surplus working note to 1,30,000. Next heading is non-current liabilities. Under non-current liabilities we have long-term borrowings and working note for it is 3, which is 10% mortgage loan, which is 1,70,000. So we will be taking into the balance sheet 1,70,000. The next heading on your balance sheet format is current liabilities. Under current liabilities we have provisions, short-term provisions, that is from provision for taxation. So which is working out for 2,26,000. So the total assets, total liabilities is 7,24,000. Next we will be the calculating your assets. Under your assets we have non-current assets. So under non-current assets, fixed asset, tangible and intangible. So as per the working note 5, we have tangible assets, which is plant and machinery, and intangible goodwill, where we have got tangible assets 2,90,000 and intangible goodwill we have got 40,000. Next we have current assets. So under current assets we have current investments, inventories, trade receivables, and cash and cash equivalents, and the working note is also given. Under current investments, which is working note 6, we have marketable securities 5,000, which has been recorded here. Marketable securities 5,000, working note 6. Next we have under inventories we have spares, stores and spares, which is working note 7, which is 1,15,000. So we have 1,15,000. Next we have trade receivables. Under trade receivables we have debtors and bills receivable. So the total of it is 2,56,000, working note 8. So working note 8, 2,56,000. Next we have cash and cash equivalences. Cash in hand is 18,000, working note 9. So we are classifying it here, cash and cash equivalents, working note 9, 18,000. So when we total up, we are getting 7,24,000, so which is equal to your liabilities. So this is the end of this problem. Thank you everyone.